Let's understand what is transaction risk. Transaction risk is a risk which arises on account of exchange rate movement. When your exchange rate movement happens, and that too because of time, okay, that too because of time, then that risk is called as transaction risk. If you couldn't understand, just look at this. This is going to give you a talk about the time gap, and this time gap is between, say, the transaction date. You have a transaction date and you will be having a settlement date. To understand this, let me give you an example. Let's say you have imported a machinery from US. Okay, you have imported a machinery from US and the value of machinery is, say, $1 lakh. The value of machinery is $1 lakh, and assume you are in India. So let's say this transaction happens on 1st January. This transaction happens on 1st January. And in your books of accounts, you will record that you have imported machinery for $1 lakh worth. That will be accounted in India at that day's exchange rate, say 63. So it is going to be accounted at rupees 63 lakhs. This will be accounted at rupees 63 lakhs. And this is what the effect when the transaction takes place. But you are not making the payment now. Let's say you are going to make the payment, or the settlement is going to happen only on 31st March. Only on 31st March. And in 31st March, if the exchange rate is 64, that is rupees 64 per dollar, then instead of 63 lakhs, you end up paying 64 lakhs. And how that happens? 64 into 1 lakh USD. That is, you have to pay rupees 64 lakhs. Here, instead of 63, you are paying 64, and this is only because of your transaction and the time gap. If settlement had happened on the 1st Jan itself, you would have ended up in paying only 63 lakhs. But since you took time in settling the transaction, you have exposed yourself to the time related risk, and that's what we call as transaction risk. So we have to understand in what are the events or in what are the transactions you will have transaction risk. If you are going to import, and if there is going to be a difference between the transaction date and settlement date, then you have transaction risk. So if it is applicable for imports, then it is applicable for exports also. But in case of exports, the risk will be on the other side. Let's say instead of 63, if on the settlement date, if you have 64, you have a favorable risk. I mean, you are going to get more money, but on the settlement date, if the exchange rate value comes down, then you have the transaction risk, that is the negative risk. Then if you are acquiring any assets from the foreign countries where you have to make the settlement, where this is the case. I mean, this is a case where you are acquiring an asset and because of which you are facing a risk. And you can also have this risk in your foreign currency borrowings. Let's say you borrow from other country, then this risk will arise at the time of repayment. If you borrow when the currency is 63 and when you repay if the currency is going to be 64, you have to pay additional amount, but your loan amount is not undergoing a change, but you have to pay additional amount, and that is only because of change in the exchange rate that to linked with time. So these are all the examples of a transaction risk.